Hello guys, hope you are doing well. I am so sorry that I don't have the live session on time. I have some problems with this software, so I was struggling with it. So hope you are still there and we can begin at any time. So as I told you before, this session will be devoted to international traders. I don't know if this time is good, yes or no. So I hope that it is in Europe and in Asia, it is in the morning, so they can be online and we can chat and we can speak about all this stuff. So I will be just waiting for some time until some guys come and then we can speak about this thing. So hello everybody who are watching right now, and we just hello Chris de Guzman, how are you? Sorry, I missed the time at 9 o'clock. I am sorry. So this is the time I reached YouTube with this software. So I hope you are still watching and you are still awake for those who are in USA, Canada. And for those who are in Europe or Asia, if you have time and you are in the morning, we can just speak about whatever subject is for today. Hello, Wendy Casa, how are you? So, sorry again for all you guys who come, who maybe were waiting for the live session to begin. Bakito Bada, how are you? Thank you for coming and joining the live session. So in general, we will be speaking about whatever subject you like, and I will give some help to international traders. Thank you very much, Bakito Bada, thank you, and thank you for coming. So as you can see, the market here in the USA have been so good this 2 or 3 weeks. And I mentioned that a lot of industries are going up and sectors, and I have made a 1 or 2 other video about this. And some people, they are looking for how to look for industries overseas. So here is the problem. There are not a lot of free stock screener online for Asia, for Europe, for South America. So here in the USA, we are so lucky to have a lot of things for free, because a lot of people, they think when you should pay the broker to give you news or to give you something, it is something that will help you make money. Okay, in general, it will never make you money. If you don't know how to trade, this is the problem. Okay, but those who are like who are overseas, they don't have a stock screener, they can't find stocks, they don't know what to do. There are others who pay a lot of commission in some countries. And I'm not speaking here about taxes. I'm just speaking about, because taxes when you make money, okay? But here in the USA, it's always good. Even if you lose money, this money that you lost will be cut from your income, which is very good for everybody here in America. So I think the laws are better here for in America than other countries. Okay, so wherever is hello Artkov, how are you? Here in America it's totally different from other countries. Okay, so here in America we have small correction, and the people are struggling. They don't know which direction is the market. So you buy a stock for it's going good for a few days and then it collapses, especially those smaller stocks. And the big stocks are trending into a range. So a lot of people they have this problem of not finding stocks to buy. And other people they don't want to attempt many times. For example, you attempt one time, you lose some money. You attempt the second time, the third time, and then some people they stop attempting. Okay, it's very good not to expose a lot of money when the market is all in trouble. This is a very good idea. But the idea of stopping, this is bad. I will tell you why this idea of stopping is bad. It's just because the market gives some days which are always good. Let's say the market gives you 1 week or 2 weeks that are good, and 1 week it is bad. So for you, for example, if you are in the bad week, most of the stocks are going down because a small correction, or because some are shorting, or because of news. So what do? You buy the first stock, it's going down, the second, the third, and then you feel that as if you are not going, you don't know how to find stocks, or you feel that it is bad. But the market is not bad. It's just you are in the bad moment. And then if you stop, the next week all the stocks are going up and you don't buy, that is the problem. So there is has to do with what we call probabilities in the market. All the professional guys know this. So you will never find a professional trader because he lost 1 trade or 2 or 3 or 5 or 6 trades, he will stop trading because of that. No, because he knows that there are other trades that will become successful. So it is just a matter of time. Okay, so this is just one point that I should mention about the markets, and almost all the markets do the same thing. Okay, out on bail. How are you out on bail? He said, I opened up a test net account on BitMEX to try my hand at Bitcoin trading. Seems kinda easy. I made money constantly for the last couple weeks. How much difference is it going live? So when you say you are you have made money in BitMEX, are you doing day trading? It means, are you doing day trading? It means you go long and you short, or are just you buy and you leave? Is it just like in like trading, like swing trading? Oh, you are doing day trading. Yes, there are a lot of times, as you can see, Bitcoin and the other currencies were going down for long. So a lot of people have shorted, although it is a difficult thing. It's not easy. But these days, these weeks they are going up. So I have made a video about this, like 1 week or 2 weeks. I check almost all the cryptocurrency, like Bitcoin, Litecoin, Ethereum. They stop and they are going up. So this, if you are doing day trading, it's okay. The same as the stocks. It means whatever you find opportunity, you can do it. Okay, so there is no problem with that. No, it's thank you, Wiseman, for coming. Out on bail said, trading with leverage. I am profitable with play money. I just think it would be different trading with real money. Now, see, real money and virtual are two different things. I will tell you why. Okay? Now, let me just before we go ahead and speak about something, let's I just give you some information about how different they are. Okay, so let's go to explanation. Okay, so I know that a lot of you guys, some of you do virtual trading, which is good. So let's say the virtual here, okay, and now real here. Real trading, it means real money. Okay, so what's the difference when you are in virtual or real trading? Now in virtual, one, you don't feel the money. This is one, I will tell you, you don't feel the money in what sense? It means if the stock goes up and you make money, okay, or it falls and let's say you lose money, and here you make money. Money made or lose money here. So there is no feeling. It means you buy, let's say you buy 1 Bitcoin, just an example, 1 Bitcoin, I just give you as an example because he speaks about cryptocurrency. Let's say you buy at, let's say at 8,000, okay? Now it goes to, let's say, to $10,000, you know those, okay, for 1 Bitcoin. Now when you make $2,000, okay, you make $2,000, you see it, you can be happy, but there is no real feeling about it. You see that there is money, but you don't feel it. Now, if you, let's say, from 8,000 it goes to 6,000, so you lose $2,000. Just an example. Okay, to lose $2,000, what will happen to you? It means you don't feel that you have lost, and you maybe you are happy. You say to yourself, oh, it is just virtual. Okay, you are happy. Even if you lose, you are happy because you are virtual. This is one thing about virtual trading. You understand beforehand that it is just fake. So you don't involve your feelings, no feeling about the money. But in real trading, we take one. Let's say you bought it at 6,000, this Bitcoin, like before it was 6,000, now it is 8,000. Now when you see $2,000 in your account and it is a profit, okay, you feel it. You feel the money, okay? You feel the money and you are happy to make money, okay? That's the thing. Now let's say if you bought at 8,000, it goes to 6,000 and you lose $2,000, okay, you feel sad. Now this I'm speaking about normally about the beginners, because understand between someone who is like professional, or it means he trades and he makes money, and the other guy who doesn't make money, there is a big difference in how do they feel. Okay, so this is one most important thing about real trading and virtual trading, is that here in virtual trading, it's fake, and you know it is fake. Even if you trade and you make hundreds of thousands or millions of dollars as fake money, okay? But when you come to the real world, it will be different, because when you see here, your feelings will interfere, and you will feel more about money because you know it is real. When you make money, $2,000, okay, you understood that you make $2,000 if you sell this Bitcoin that you have. And if you lose, you know that you lost some money, and it is real money, and you can become like sad or something because you lost money. Okay, so try to not to confuse of them. Now, the best thing in virtual is that you try and you see if your techniques are good or bad. This is the good thing about virtual, and you just see how the stocks move. This is good when you are virtual and you have virtual account before you trade. And most of the people, they do it. They do virtual before they go to real trading. Okay, because in virtual, if you want to buy something, you click, it's bought. But in real trading, sometimes you want to buy stocks, but you can't because there is some problem, or not sufficient money, or the low volume, or there are problems. Okay, this is just to show one of the things that I'm speaking about here. Okay, so thank you. Thank you out on bail for your questions. Now another thing he said, I am saying virtual trading seems easy. I am afraid to go live. I think it's way different from emotions. Yes. Now out on bail, I will try just to explain to you something very, very important in trading. You should work on your emotions with discipline. It takes time. It takes 3 months, 6 months, 1 year, 2 years, 5 years. It depends on each trader how much it takes him some effort in order to stop playing and to do a good job. Now, in order to do a good job, you should be disciplined. To be disciplined, you should have rules in your trading. Okay, you should have rules. Let's say in our, when we do let's say when we do swing trading, or you do day trading, you should, before you buy, so I will just out on bail, I will just try to explain to you how the feelings can make you a loser in the future, and you will lose a lot of money. It's just because you can't control yourself. So let's give you some idea here, since you are new, and I see that you are new here. I will just show you. Okay, so the most thing you should know is discipline. Now, discipline, okay, discipline, it means you should have rules. Okay, rules. For example, for us, when we want to trade, we use a signal. Okay, it means a criteria. We don't just buy because someone or the media or tell us to buy. It means we should know what you are doing. Okay, so no tips, no stock tips, whatever. No stock tips. This is the first thing you can imagine to do. No stock tips. It means no one will give you stocks to buy. This is wrong, because you will never know why. Why should I buy this stock in that on this time or on this day or on this hour. Why? So if you know why, it means you are using signals and criteria. You should know why. Now, second thing is that feelings interfere. I will just give you an example. Now, you buy a stock at $20. This is what beginners do. Now, next day, it goes to 21. So you are making $100, okay? $100 next day. Let's say today is Monday, tomorrow is Tuesday. So what do you do here? Whenever you see little money, you cut it. It means you sell to get this money. Now, the opposite side, $20, let's say it begins to go to 19. You have no stop loss. It means you don't stop loss. This is the second day here, Tuesday. On Wednesday, you stay more, it becomes 17. So how much money you are losing? You are losing here $100, and then it goes to 17. You are using $300 in this $100 that you bought. Okay? And the more you go, the more you leave the stock going down, the more you lose more. So here, the feeling here for hope that the stock will go up will make you stay, and this is a wrong thing in like let's say in swing trading or day trading. So here I'm speaking about swing trading in general. So this is what in general what the beginners are doing the whole year. The whole year they are doing the same thing. Now if you make 100 and you lose 300, are you going to make money at the end of the year? You will not. So this is just a simple thing that I'm explaining here. This has to do with the feeling. So in order to be disciplined, you should stop have this feeling for hope. And you never cut the money when it's going up. When the trend is going up from 20, you can if you wait for a few days, it can go to 30, for example. Okay? Now from 20 to 30, you are making $1,000 instead, 1,000 in this trade instead of 100. Now, if you stop your losses onto 100, so if you do two trades, one is 1,000 and the other is minus 100, so you will have $900 as a profit. So this is the way to make money in the market. Okay, this is just an example I showed you about how we do swing trading here. Okay, this is just an example. Brian Loveless, oh, how are you, Brian Loveless? You sent me an email. I sent you an email. I didn't get an answer. Okay, don't tell me that you have answered my emails. If you have a problem, please let me know now in this session. The question is, Brian, he said, hello Karim, what is the best value for training, the subscription or the individual lessons? I'm telling you right now what is the difference since you are watching. Subscription is for people who want to continue their education and to get everything on their hand. It means there are 13 training levels. Okay? Now, I will just give you an idea how this works. Just for the guys who want to know. Subscription here, let's say here is the subscription. Okay? Subscription, and here we have individual. Okay, individual training, it means training level, let's say 1 is a free. Okay, you can check it. So you go to, let's say, training level 13. All these are free. Now, if you want to have the training one by one, okay? Individual training is good for you because it stays in your account forever. It stays for your account. For example, you buy training, training level 1 is free, for example. If you get it for free, it will be always free for you. Now, second, third, fourth, fifth, whenever you go to your account, 24 by 24, you find these files or these videos and you study from them. And then after 6 months, you come back to them and you study them. After, let's say, 5 years, okay, 5 years, you have studied, you have done, but you have you want to study them again, you come back again and you study them. This is why individual training is very good. Now, subscription, you will have the 13 training available for you from just the first month, okay? Now, second, I give you a weekly search. A weekly search, I do it on Friday, okay? I show you how to search for stocks, how to find them, what are the best stocks. It means a practice. If you are going to, subscription is a good practice for all these trainings. Now you have lessons in the week, weekly lessons. You can ask questions and I make videos, ask questions, okay? And I make videos, and this is excellent for the people who are very, very interested into too many details, okay? There are some people who like to ask many questions in the same subject. So if you are like one of those and you want very detailed things, you can ask about something and then you can ask another, after I answer, you can ask another thing. And I will give, answer questions by email also for those who don't want to wait. So I always answer by email. And there are a lot of things I do is I do announcement for individual and for subscription announcement. If I have new things or something is good or something in the market, or sometimes I give some information as my chart. So it depends on you what you like to do. And the subscription you can cancel at any time, okay? You can cancel, and if you don't know how to cancel, you send me an email, I cancel you, there is no problem, okay? So this is the difference between individual and subscription. Okay? So let's see. I was explaining without having the thing. So as I told you, just this is just a general thing. Individual, subscription. So if you want to have the videos for you all the years, always you can check them. Try individual training better. Now, if you want to study, to practice, and you are active and you ask questions, subscription is better for you, okay? And you have time. It means 1 month, 2 months, 6 months. You have time to study all the training if you are serious. Okay. So thank you very much, Brian Lovelace. Thank you very much. You said I ended up picking Fidelity as a brokerage firm. Thank you. Yes, you have done a very good thing. I think you have done very good thing. Oh, you say I can't see anything. Yes, I was explaining without showing the thing, but I showed it last time. If you have questions, more questions, please, Brian, ask now, because we have the whole hours we are going to speak. So Roth IRA is very good for you guys, for those who are going into, like, in the future, and you don't want to pay tax. This is the good thing for those. But before you do it, you should always ask your accountant for more information to be aware of everything. And Brian Loveless, I don't know how much this Fidelity will ask as commissions and so, but I think you have checked all the brokers before you do the thing, and hope they don't ask you or they charge you fees. This is the problem. Okay, fees and commissions, always look at them. If there is any unusual fee, please try just even if you find fees and you don't like them, you can change the broker. The broker is not something, the broker is just something that relate you to the market. Okay, it's an obligation. You should have a broker, but you can change the brokers. If the broker is not good, you can change it at any time. You don't care about this kind of thing. Yes, very good, Brian. Very good. 495 is the standard line right now. My broker E-Trade, it says 695, which is too much. But for me, I get the old. I got the old commission, which is $3.95. Okay, I get a better deal. And let's say Juan Di Casa said, if I buy a stock and then find out that the earning date or the next day, what should I do? Okay, here is a question that everybody guys should know about it, and thank you Juan Di Casa to bring this thing. Okay, Bogero meets. How are you, Bogero meets? I will answer Juan Di Casa, and then I will speak about sure traders, because I see it before, but I have no idea about it. So I will just answer this question. Okay. Now, here is the thing about okay, about when you buy a stock. Let's say today, just an example. Okay, it is Friday. Just an example. At 3 p.m. you buy a stock. It's $20. But after, this is the buy point. And then you see that this stock has, let's say, on Monday, you have an earning date. Earning date, it means the company will announce the earning date for the quarter. For the quarter, it means how much this company made in 3 months. Okay. And is it good or the same or lower than the what we call analyst estimate? So I will show you. So the analyst estimate. What does it mean? The analyst estimate. What does this analyst do? It is just a game. Okay, it is just a game of statement. Let's say the analysts say that this company will make $1 for each share you own. Okay. Now this, it is just virtual. Okay, it's just virtual. It's not going to affect your stock in real, because they will not give you, let's say, $1 for each share. This is just virtual according to the real earning of the company. Real earning. They just calculate that the company will make $1. Now what you should do when you buy the stock and then you find on Monday we have the earning date. Okay? So this, you have 3 choices. Now the first is you can sell again You don't stay. Now I will tell you why. You sell your shares because you don't want to have the risk of earning dates. You don't like. Now, why? Because you say to yourself, if I bought at $20, what if the company has bad earnings? It means under $1. Let's say it is 0.50. The company said that the earnings is 0.50. It's not $1. So what does it mean? It means the analysts give more earnings than the real earnings. So what do the people do? They will short the stock in general. Let's say tomorrow you will find it on Friday, you will find it $15. Okay, and you lose 25% of your money because of this earning. That's why some people, you have the option to sell all your shares and in order to avoid this risk, but you don't know this risk if it is good or bad. Okay, so this is number one. You sell. Now what is the second thing? You hold and you bear the risk. It means you take the risk, okay, and you say to yourself, I am with the risk. If it goes up, I'm with it. If it goes down, I'm with it. So this is the second choice. Okay? And the third choice, you can sell half. You can sell half and you leave the other half. Let's say you are scared. So if you buy 100, let's say you buy 100 shares, okay? You just buy 50 shares. So you sell other 50 shares and then you reduce this. It is called to reduce the risk. So here you have the option. You have one of the three you can do. Okay? And next time, this is, for example, in the future, don't buy a stock without, so don't buy before you see the earning. Okay? Don't buy before looking at the earning. It's very easy. You just go to Yahoo or to any other website and it can give you the date. There is what we call the earning calendar. Earning calendar. It gives you all each day the stocks, and you can put your name, the name of the stock that you bought, and it will give you the earning date. Okay? So this is one thing that you should take into account. So in the future, since we are doing swing trading, and you might stay very, very long in the trade, you will never know. Maybe you stay 1 week, 2 weeks, 1 month, 2 months, 6 months. You will never know how much the stock will give you. So for me, I'm telling you the truth. For me, I have never sold a stock before the earning. Okay? You know why? Why is that? It's just I got a lot of gap ups, but I have got gap downs also. Yes. Okay, but I am always thinking that when the market is very strong, you have more gap ups than gap downs. Okay, because the market doesn't go that much up without any kind of news. And another thing that you should always think about one day casa, you should think about this also, that you should first, as I told you, check the earning dates. And the second thing you do is bear the risk if you fully understand what you are doing. Okay? You bear the risk if you want to. But if you don't want to, you can just sell, or in the morning you see what's going on, and the news can come before the market, or during the market, or after the market close. Okay? You can check the price if you want. If you want to see the price, for example, let's say it's after 4. I just give you here an idea. There is one guy who has done a day trade in the earnings. I will show you what does he do. Just an example, without doing like a swing trading. Okay, so what does he do? He go to a stock, he see the mini stocks. Now he find a stock, let's say this is stock, it has an earning. Okay, now let's say it is 3 p.m. in the afternoon, and the market will end at 4 p.m. This is the market will stop. Okay, so here he buy shares, whatever shares he likes, and then he will be waiting for the news, because it says waiting for the news. Now when you wait for the news, you should keep an eye on what is the thing? Price. Okay, this is someone, he sent me an email. I think he bought 500 shares of Twitter at that time, 500 shares, and then after the market, it's going up for $5, and he sold. Okay, he sold during it means after the market, after the announcement, he sold. Understand that you can sell stocks using limit order. You can sell stocks as you like. You can buy them also. Okay, so this guy is just looking at the price, because I have made a video and explained this technique. Some people do, and he try it and he succeed, but understand that the stock might go down, so he wants just to put a stop loss, and he wants to exit if things go bad. Okay, and he just stayed for 20 minutes, or the stock was he saw $500 as a profit, and then he exits. This is a technique that some people do. And some people, if it is before the market, some people when the market opens, they try to see if it's going up, they buy more, and they do live what we call a day trade. Okay, so now we go to another question. Bogero meets, is Sure Trader good to use? Okay, I cannot tell you if it is good or bad. You should see the commissions. How much is the commission, and you compare with other brokers. Second, you should see if it has what you call real shares from the market, because there are some websites, especially in Europe and in Asia and in South America, they are not linked to the market. You don't buy real shares. You buy only a product that it is looking like a share, like this CD that the people buy. It's not a real share. Okay, so they are not. For example, if you buy 100 shares of Facebook, it is just a fake shares. Okay, it's not real. So try to see if this Sure Trader. I have no idea about this, but I have heard about it. Okay, I see Sure Trader. Let's see. Best online trading forum for day traders. Okay, let's go. Join us. Okay. So a question. Where is this guy? Bogiro meets. Well, where are you from? Which country are you from? Because I just go to it. It says you have an invitation to have this company and to do an application. So this I don't know about it. So it's not. I think it's not USA company. It's not USA broker. And please, when you are following brokers, please try to see if they are regulated and it follows the rules of the country that it is working in. Some websites, some brokers, you see them, they are very good. They give you money, they give you shares, they give you a lot of things that it is stupid. Okay? Now, when you put your money, and then sometimes these brokers disappear because it's just website. Okay? So try to make sure that these are true brokers when you want to put your money in. Okay? So try to do that. Now let's continue with other questions. And Trump, hi Karim, how are you, man? Why always Apple drop before the earning season? Now, what do you mean by they drop? It means is it because after the earning news or just before? You say here drop before. Now let's go to the chart and see Apple. It's a long time. Okay, let's see Apple. Apple is going down so badly. So we have two gap downs, 1 and 2. So it means there is something bad about. So here it was 183. Now 165. So it's dropped a lot. So I don't know. I don't know. Let's see here if we have. Is it because of the? Okay, there are a lot of news about this, so please, if you have time, try to read this news. I am not going to read news, but try to see Trump. If this has a relation with the news, either earning news or earning news is different from other news. So try to understand that. Okay? So in order to give you you are to give you something about this. So when is the earning? Let's see here. Apple earning date. Earning announcement for Apple May 1 is expected to report the 5-1 after market close, May 1st. Oh, okay. So 2.77. Now, Trump, these gap downs that you see in Apple is something else. It's not earning. It has nothing to do with earning. But the earning, after you have the earning after the market close, the estimate, they say it's $2.70 for each share. This is the earning that it is the what we call the analyst consensus. It means what the analyst says. If the company has made more than $2.70 in earnings per share, you will see that the stock will go up. But if the market has not doing good, this Apple, you will have a gap down. But this has no relation with these gap downs that you see before. So if you want to see why is that, please go just and read why Apple has been going down in gap downs. It's for the news, but it's not earning news. Okay, so I just checked. Has nothing to do with has nothing to do. It has nothing to do with earnings, because the reason for that, I am very certain, is that we don't have the news yet. The news of the earning date news, it's not coming yet. It comes on the 1st of May, after the market close. So you have no information. So the stock go up or go down, it has nothing to do with that. So if you are interested to know more Trump, you can go online and you check why these 2 or 3 days we have gap downs. You can check and they can give you the information why is that. Thank you, Juan de Casa. Thank you for the question. Last 2 earnings, Twitter did well, gap up. But see, don't always predict that there is good or bad for earnings. Always you have surprises. So understand, Trump, if you are going to do a trade and you have the earnings, understand that it could be a gap up or could be a gap down, or sometimes the stock doesn't do nothing when the news are not that much interesting. Okay, so don't try to predict the market. You will be always false. Okay, it's not because Twitter has 2 good that this 3rd will be good. And it doesn't mean if it has 2 bad that this will be bad. It depends. Okay? So it depends on the news itself, and we have not seen the news yet. Hello, James Eatman. How are you? It's a long time I haven't seen you. Thank you for coming. Bugiro meets. You are from Canada, but why you don't? In Canada there are many big brokers. So why you are looking for a broker that it is not, maybe it's not from Canada? The best thing I tell you, Bugero, is try to find Canadian accounts, because they told me that there are some accounts when you don't pay tax. Maybe you know better. If you don't know, please search your stock market and see these accounts, because I have taught many Canadian, and they told me they have some accounts where they don't pay tax. It's not like here in USA. When you are in those accounts, you don't pay tax. It's like our Roth IRA here in America, where you don't pay tax. Okay? And it's a very, very good thing. For the long run, for many years, you can buy stocks and you leave them. And if they go up and you don't pay tax, it will be a very, very good thing. Especially for here in USA, we have Roth IRA. For Canada, I don't know what do they call them. So Bigoro meets, you are from Canada, you should search in Canada. Okay? And you can send me an email. You can find my email okay, in this here under the subscription. Okay? And you send me an email and I will help you with that. Now, let's see here. James Eatman says, do you like to sell covered calls? Oh, okay. So let's answer James Eatman question. Okay, so he says, do you sell covered calls? Now, before we go to that, I will just try to explain to you this covered calls. James, try to understand, if you sell covered calls, okay, this period, let's say you are selling these covered calls for 1 month contract, and you get the premium. It means they give you $200 or $300 or $100, whatever money they give you for that contract. What if the stock, okay, is going down against you? So I will just show you just to understand this. Okay. So now, if you how do you sell covered calls? Okay. Okay. So you have let's say you have 100 shares of a stock, 100 shares, and this makes one contract in option, one contract. Now, this contract has time limit. It could be 1 month, or 2 or 3 or 6 months or 1 year, depending. Now, when you sell a covered call against your stock that you own, okay? Now, let's say it is 1 month, and then when you sell these covered calls, let's say you get $200, okay, as premium. Let's say the stock is $20. Now, what if this stock is going down to 15, for example? Okay, let's say it goes from 20 to 15. So you lost $500 from your stock, and you get 200 minus 200. So let's say you are losing $300 in this covered call. But if the stock is going up, okay, so let's say this going let's say from 20 to, let's say, to $30. Now this guy can make a lot of money, and you make only $200. Let's say this has made from 20 to 30. Normally you will make $1,000 if you hold the stock without covered calls, without these covered calls. Let's say you make $1,000. But since you have sold your covered call to someone else, if the stock is going good and it's going like 1,000, the other guy who bought this call, he will make money, okay, on the contract, and you have taken your money, which is $200. It means what you get in the premium is limited to what to the contract, how much he gave you. But if the stock continues to go up for 1 month and he makes a lot of money, so what is I am explaining here for you? It is just this: understand your risk. Okay, understand your risk when you sell the covered calls. If it's going up, you are limited. You are limited in your you get just the premium. Okay, but if it is going down, okay, your risk is big if the stock is going down, because the other guy, the guy who bought the covered, he bought the call. Let's say he pay you $200 for this call. Okay, he pay you $200. He expects that the stock or the contract will go up. But if it is going down, who bears the risk? Who bears the risk? Is it this guy? 200? This guy has paid only $200. If he lose only 200. He doesn't lose more. But you, as I have showed you, the stock was $20, it goes to 15. You have lost, let's say, $500 in 100 shares. So you got $200 because he gave you $200. Okay, and you lost $300 in this game of options. But let's say the stock has gone only $200 and you get $200, so you break even. So always when you do something, think about the future of the stock, because the stock, you own it, because you own the stock, it's yours. So think about the risk. Okay, this is if you are like a if you are an investor. So this is just to make sure to understand. So thank you, James Itmon, for the thing. Now Bigoro Meets, he says that this sure trader is in Bahamas. I will ask you a question, Bigoro Meets. Try to understand me here. Bugero Meets, try to understand what I'm saying to you. You are from Canada, and the broker is for Bahamas. What if you put 10,000, 20,000, 100,000, and this website disappear? What should you do? I will make it clear for you. Check the explanation again. I will make it clear for you to understand your situation, and you like this broker. Okay, so you are from okay, so the broker is in Bahamas. Okay, it is a website. Let's say it is Sure Trader, just a website, suretrader.com. Now let's say you put $100,000, $100,000 into this broker. You are from Canada, right? You are from Canada. What if the next morning you put suretrader.com and you don't find it? No website called suretrader.com. Now your money, it could be stolen. Okay, so but if you, like, you are in Canada, if you have something in your country, like a broker in your country, at least you can check with your government, you check with the regulations, you check everything, because you know, and it is regulated, and you know the thing that that it is the broker. And this, as you can see, TFSA, you say it's called TFSA, which is, this is the count that you should use. Now the question is for you, why you are looking for other brokers and you don't use your own broker in Canada? This is the question for you, and I hope you give me an answer, because I have no idea about this. You said no PDT rule. Yes, because of the day traders. If you want to no PDT rule, you can trade, for example, forex. You can do day trade. There is no PDT rule. Or you can do options. There is no PDT rule. Or you can do futures. There is no PDT rule. But in stocks, yes, there is. So, hello, Rahmatullah Modi. How are you? Fine. Thanks you for coming. So, as I told you before, when you want to do something, you should always think about it. And it's very dangerous. There are a lot of things that are very dangerous, especially about money. When you put your money somewhere and the next day you don't find them, or there is some problem, or okay. But if it is in your country, it's better to be in your country. At least you have to check, or you call someone or something like that. That's why for me, I have always used USA brokers, because they are big brokers. All the people, they know them, and they are regulated. And I don't like things that are not regulated. Okay, especially for overseas. Overseas, anyone can do website and he say that he's broker. Okay, so it's and they are not regulated, and they tell you no PDT rule, but sometimes they are not linked to our market. Let's say you buy Facebook shares, but it is not true. You are not buying Facebook shares in real. Because here in America, when you buy, let's say you buy 100 shares, let's say 1 share of Facebook, you can have this certificate owning that you own Facebook, 1 share of Facebook. You can get that, and you put it aside, and you leave it for 10 years or 20 years. But the other brokers, everything is fake. Everything is fake. You say you have bought half of a share, like in some websites do. You can't buy half of the share, except when you are with a big bank that do that. So Brian Loveless said, so I will just drink some coffee because I'm still sleepy, and then we can see his question. So the question has said, with Brian Loveless, Kareem, now that I know the difference between subscription and individual, do you think as a beginner I will be better off with the individual? Now, see, what I suggest to you, you can go, training level 1 is for free. You can go training level 3, you finish it, you begin to practice. And then you go to 3, you finish it, and then you practice. Then number 4, 5, 6, 7, and you continue like that. And then if you feel that you need more to practice, you can go and get the subscription. Or you can get the subscription and you stay 1 month, 2 months, 6 months until you understood everything. You can ask questions. I can make videos for you when you ask a question, very specific questions. And each week I have the weekly search, so you can just see how I search, how I find stocks, what are the different ways of searching, and so on. Okay, so this is one way. So I can't decide for you. So you understood the difference. So if you want to hold this training for many years, it's better to do the training. It means the training levels, and you keep them in your account. And let's say 6 months you need to revise again, to study again, you can find them. Okay, but if you are interested right now to get the all the training, and you begin to read, to study, and to practice each day, each week, so the subscription could be better for you. It depends on your goal and what you are looking for, but it's very simple. Okay, it's very simple. Some of my students, they like the subscription because they are always with me, and some other people, they like just to study at their own ease. Okay, they buy let's say training level 3, level 2, how to search for stocks using stock screener, and they stay studying 1 month, 2 months, 6 months, and then they go to another thing. I want to make money from a small account, Kareem. Making money is until you understand the strategies and how it works. So you need to practice and you need to trade. So you can just go and learn something and then you begin making money, because in trading you should know a lot of techniques, a lot of skills, how to control your you manage your account. This is very, very important things that all the people miss them. Okay, they think just to find a stock, where to buy it, and they can make money. They can't make money like this, because in the future you will find that there are a lot of things that you should learn about how to control your account, how to control risk, how this is the most important thing in trading, and the people, they miss that. And they think that just show me what is this stock, or how I find this stock, and I will make money. It's not your problem. Okay, it will never help. It will never help like that. So there are things that you should learn and understand. So making money is when you understand what you are doing and you are looking at the whole picture. This is where you can make money. If you have, like you say, if you have small account, try to save more money in it. Don't try to think that if you have $1,000, $2,000, you become a millionaire, like the other guys said, by the end of the year. Okay, so try to make your account bigger and bigger. It's like an investment that you can even invest some money, like investing, and you do some trading and see which one is good for you. Okay, because some people they can save a lot of money, put them in stocks and leave them, and they can make a lot of money when their account become bigger and bigger and bigger. Okay, for small account, you should look for small stocks, stocks that are $15, $20, $7, $5, $2. These are the stocks that you should focus on. But understand that they are risky, so you should control your risk a lot. Okay, so if you are not disciplined, you will lose money because you are not disciplined. If you see your stock and you don't put stop loss to stop this loss, and you continue losing, I have seen someone contact me. There are crazy things, I'm telling you. He told me he lost $145,000 in 3 months or 6 months, just the beginning of the year. This is crazy. How the people they go into a penny stock or something, and they don't know what to do when they enter. They buy and they see the penny stock is going down, and they keep holding a loser until they lose everything they have. So this is the ways where the people, they lose the most, because they don't know how to trade and they don't stop the loss when they have a loss. Okay, so it's better, Brian Loveless, it's better to begin slow. You can have a virtual account, you can begin to trade. Ask questions always. Whenever something you don't understand, ask questions. Okay, it means you should follow the steps. Learn as much as you can. Ask questions when you don't understand what does it mean or something. This is a good way to progress. Wendy Casa said, I felt that we are in bear market. How about you? No, see, Wendy Casa, I told you before, and I have explained last week and the other week and the other week, we are not in a bear market yet. We are trending into a range. I have explained this, and Wendy Casa, I will explain to you again when we go to the chart. Okay? So let's go to the chart and explain a little bit. Let's go to Dow Jones. Okay, check the Dow Jones. So this is January, this is December, and this is November. So November, December, January, they were so good. Most of the people who buy stocks in general, they have made money if they know what they are doing. Now, in February, March, and beginning of April, you see that we have a correction, and then it stops, it goes up, we have another correction, it goes up, another correction until it goes down, and then we have another trend, and the stocks are going down. So, what about the future? No one knows about the future. So either it can go down or it can go up. So Monday we will see. But understand that not all the market is going like this. And this is the problem. You should search for stocks. So for me, this is called trending into a range. It means when you see the chart here, it's not as good as here. Here, most of the people, if they know just how to search for stock, they can make money. But here, it's only the people who know how things work in order to get to the money. But understand that if I'm showing you here the trend, if the market goes down and continues to go down and crosses the support line here, if it goes like this, it will be, in my opinion, a beginning of the bear market, because we have February, March, and April. But if let's say if this correction, and we have a reverse and the stocks are going up and crosses the resistance line, this trend will continue here, and 2018 will be a good one. But until then, we don't have a confirmation yet. So either the stocks go up or go down like this. This is how things will work. But in stocks, they are different. Some stocks are going up without this thing. So stocks are not doing the same. Okay? Let's see these ETFs, these markets, all they do the same thing. So energy sector, I told you they are going good this 2 or 3 weeks. That's the thing in general. So in general, you should search for stocks. If you feel that it's always you buy stock doesn't go that good, try to limit your trading. Limit them, it means don't trade that much. Don't expose a lot of money into the market until we see this direction where the market is going. For me, before the first correction, when it comes in beginning of February, I shorted the whole market and I continue, but later it stops and is going up, so I sold all my shorts. Okay, so you should know what you are doing. Are you following the indexes in the market, or are you following stocks? Stocks, they play differently, especially small stocks. Small stocks, you can have 50%, 100, 200% in a few days. These are the penny stocks and small stocks. They don't follow the whole market. But the whole market, you find big companies, big names, and all they do the same as the market. Like Apple, it's a big stock in the Dow Jones. So if it's going down, as we have seen, the Dow Jones will be going down because it is so big. Okay, so but when you buy smaller stocks, you will find that they go up. They don't follow the whole market. So here there is another question with Trump, and then I see a question, Shubweki Ashi. I think I have seen this name before, but I will answer you just a few minutes when I finish with the thing with Trump. So Trump said, Karim, is it true that any company want their stock go up before the earning so they can little dividends for shareholders, and after the earnings the stock will climb like this Apple fraud? So you say they want their stock go down before the earning. Oh no, you misunderstood Trump. You misunderstood the earning. Okay, so the dividend, which is always funny. You are always speaking about dividend and the dividend. I will explain to you, Trump, one more time about the dividend. Okay, so let's go to the explanation and explain to you. So hope you guys try to understand what I am saying here about the dividends. At least I will explain more time. Now, in general, when they say a dividend, they say it is a cash payment. You can see the definition. Cash payment from the earnings or the company earnings. This is not true in the real trading. This is not true, although they say it, but in the stock market it has nothing to do with this. So a dividend, let's say the stock, they declare that the stock will be, the dividend will be $1. Now, what does it mean? $1, or let's say it is 1% of the stock. Just an example, okay? Now, $1. So when the stock is, let's say it is 20, when they want to cut the $1, so let's say it is I give you a general thing. Okay, I give you a general thing. Let's say the stock it is $100. Just in order to make it clean. So, and let's say, so $100, when they want to give you the dividend, which is $1, they cut it that day $1, and then the stock will be $99. So what does it mean? What does it mean? It means that they will send you $100 to your account, okay, to your broker account. This is $100 that you get because you own 100 shares, and $1 from 100 shares, it is $100. And the stock is 99, so you have the same thing. What does it mean, the same thing? It means 99 plus 100, it is your stock and it is your money, but it has nothing to do. It has nothing to do with the stock when we have the earning news. Earning news has nothing to do with that. Earning news is just a news about how much the company has made. Okay? So the dividend is something else. It is the company that announced how much money will be taken from the price of the stock. It is not the earnings of the company, the real money of the company. You don't see the real earnings. Let's say this company made $5 billion in real money, okay? In real money, this is the real money of the company. Now this $5 billion doesn't go here to your account. It means they send you $100 from this money. No, it is from the stock market, from the stock itself. The stock has a relation with the company, but it is not the earning money, the real earning money. So for you, Trump, try to understand that you are living in two worlds: the real money and the stock market dividend. It's different. It's different because your money, $99 plus $1, you will have the $100 that of yesterday, because yesterday the stock was $100. Today, after they cut, it will be 99, and then it will trade up or down depending on the day. Now, I will tell you why the dividend has nothing to do with the company. I will tell you why. Okay? Now, let's say that you work with Apple. You are a worker in Apple. Let's say an example, okay? You are a worker. You work in Apple. You have a salary. Let's say you have a 401k. Now, this company, Apple, will give you will match money as in 401k. For example, let's say you put $200. Let's say Apple matches 100% and they give you $200 from the company. Now I will ask you a question. This question I will ask you. This $200, from where do you get this $200 that they give to you and put in 401k? From where? This is from the real earning of the company, from the $5 billion that they make. Just an example, okay? It is not from the stock, because you, for example, you don't have no stock. You have no stock shares. You don't own Apple. You work for Apple, but you don't own. No stock. And they give you money. And they give you too much money. Okay? They give you $200 for nothing. It's just because you are a worker. So a worker or executive, they get money from the real money of the company. This is the real money of the company. Even though you have no stock, you don't have shares of Facebook, of Apple, for example, in the stock market, but still they give you money. So here, $200 is given from the real money, but if you own Apple, they let's say an example, Apple is 100, just an example. They cut $1 as a dividend from the stock itself, not from the real money, not from 5 billion, but from the stock. So what did you own? You own nothing, because they give you money from the stock itself, not from the cash that they have. Okay, so hope you understand this. I have explained this before, Trump, and I think you forgot what I told you. Now let's Muhammad bin Naba, how are you? Thank you very much. I know your name. Thank you. So let's answer the question of Shibwiki Ashi. He says, hi Karim, do you use patterns and price action in your trading style? Yes, I use price and criteria. I don't use patterns, because patterns, there are thousands of patterns. I will just give you an idea. What do you mean by pattern? Okay, so for me, I use the price and some criteria that I use in the chart, and then I trade. So if you for example, you are thinking about patterns, what does it mean? It means how the stock make patterns, and the people, they get ideas, opinion about these patterns, and then they buy because of that. This is psychological thing. But for me, I don't use these patterns. Why? Because each stock do its own pattern. So there is no only one pattern. There are thousands of patterns. So if you want to see one pattern in the stock, you will find another pattern in another stock. So it would be just useless. But some people, they use these patterns and they study them and they see and they buy from them. But for me, I don't. For me, I collect the price information and I use other criteria, and then I will have a signal. I buy and put stop loss and I follow the trend. Okay, this is what I do. And I think Shubwiki Ashi, you have been here before, and so my style is totally different from it's totally different. Trump said how to avoid the short squeeze trap. You know, last week I have explained this, Trump. I don't know if it's you who have made this question, or it is a new question, but I have explained it yesterday, last week. But it's okay. I will. There is no way you escape it. A short squeeze is when you short the stock and in the morning it goes up against you. I will give you just an example. So these are for the short sellers who short, like in swing trading, okay? Like in swing trading. That's why for me, I don't short as a swing trading. I don't like it. I don't short. So for example, let's say a stock is $2 and it was $3 before, and it's going down. It's going down, and you get the idea, and you say today, let's say today, since the stock is going down for many days, it's going down. So you say to yourself, I will short it down. Okay, sell short. This is for today. Let's say today is Friday. Now, on Monday, since you are shorting the stock, on Monday, the stock from $2, you find it $10. This is what we call short squeeze. Okay? It means you, in order to exit the trade, you should buy it at $10. There is no way out to buy it less. So your loss will be 500 times loss. This is why short selling in swing trading is very, very difficult. You should not go to smaller stocks. Maybe you should go to bigger stocks to short sell them, bigger stocks, because they can't do that. Okay. Now, if you lose 500%, what does it mean? It means if you have 2,000, let's say you put $2,000 in this stock. Now, what is missing is $8,000 that the broker will ask, minus 8,000. So your broker will call you and you say you should put 8,000 in your account today, or you will have to face some problems. That's why to go to short selling in small stocks and you go to do swing trading. You can do, for example, it's better to do day trading. Okay, day trading, and you should not put a lot of money until you understand how things work, because people, they have a very strong broker for day traders, and maybe you are using a broker that it is not good for day trading. So that's why for me, I don't swing trade in this short selling. I don't do that. If I want to do, I will do like shorting the whole index, shorting the whole market with ETFs. This is what I do, because it is global and it doesn't have this stuff. Okay, like losing because the stock has gone up. So to avoid short squeeze, you should not do swing trading in short selling. Okay, this is what you should do in order to avoid them. And this is you say from 3 to 10. What do you mean by how to avoid the short squeeze from 3 to 10? What is this 3? 3 what? 3 to 10? Trump said E-Trade isn't good sometimes in execution, and they show higher prices. Now, first, what do you mean by they show higher prices? Okay, so I don't understand what you mean by higher prices, because the price of a stock, they get it from the exchange, so it should be a correct price, because they get it from the exchange. They can't put other kind of prices, because this is will be like stealing or something, but I don't think so. So what do you mean by when you say is it good sometimes in execution? So what do you mean by that? Do you have like a problem with execution or something? You should call them and you should follow what they say about the stock, especially smaller stocks with low volume. You will have a problem with them. Okay, if it is a stock with high volume, you will not get problems with execution. because the bid and the ask will be always tight and you don't have problem. But when you say they show higher prices, I have no idea. Jeffrey Long, here is a very interesting question. He say, what is someone subscribes to your golden subscription to 1 month, learn all the 13 levels and cancels the subscription. This way he only pays $55. Okay, here is the problem. There are too many information and you should practice. Okay, you should practice in order to understand these questions. This information that I supply, it is not what we say, it is theory and you need to practice to understand them. 1 month is not sufficient. You have about, I don't know how many videos. We have about 800 or 900 videos in the subscription, and it is not that easy to get the thing. And for me, I'm trying just to help. Whatever you do, either you buy individual training or you go to my subscription, it's up to anyone. The people, they need me, okay, in understanding the thing. But I see most of the people who just try to see what's going on, like training or something. Most of them, they will do nothing with my training because they can't understand anything, and they can't proceed because you should practice a lot. Okay, so people who play, they just subscribe, they do, they are free. So for me, I don't care what they do, but in the market they will punish them. So $55 that they see, they try to, in their education, they are trying to be very like restrictive in education, but when they go to the market, they punish them with thousands of dollars. And this is the problem. This is the problem. You will be punished because you don't understand the whole thing. The whole picture, you can't see it in 1 month. You should, because right now I have friends or students who have been many years with me, and we share information. They share with me their good stocks. They share with me when they have bad trades. And we become friends. It means a long time ago. Even if they stop their subscription or they have all my training, but they are still sending me emails and we have good contact. But those people, you know, those people who come just to see and they go, they will never get benefits of my training. And that's why when they go to the market will punish them, because it is not as easy as you might think. Okay, trading needs months of studying and practicing and asking questions. And those people who subscribe and they continue, those who get the benefits, because I show them each week. I show another thing, another way to do it, another way to search. Some stocks that you should not buy. Okay, if there is something good in the market, I will tell them. So it means they are with me for many years. So it doesn't matter. It doesn't matter for what the people do. If that person buys all 13 levels of training, then he would pay more than 55. Yes, I told you, Jeffrey Lang, I told you that these guys will never succeed to understand anything. Okay, it's like they give you meat and you want to eat meat. Like, let's say you eat it for half an hour and you want just to swallow things in 1 minute or 2 and then just swallow things. In my training, you should chew the information. It means if you see how I search for stocks, you think that it is just this. No, there are other criteria that you should learn, and this criteria, they don't come in the stock screener. You should get them and you should learn them. For example, stop loss, you should take time in order to do it. How to follow the stock. There are a lot of things that you should need time. Going very quick, it will never happen. And even if you pay $50 and you see some training, but the problem is that when you go to the market, you don't understand anything. The market will punish you. And most of the people, they lose their money because they don't understand anything. They think that it is just because you buy here and you sell here, you make money. No, you will understand that. But for me, I am always try to help as much as I can, so it doesn't matter. Thank you very much for Jeffrey Lang for your questions, and understand that when someone has only 1 month, he can't go through all the training. Okay, and those who bought the training, they will keep them the whole year, and they will watch them again and again when they have a problem or they don't understand, and they can ask specific questions when they see my videos. And this is why if you buy my training or you do subscription, it's the same. The more you stay, the more you get, and this is how it works. You say 2 or 3 cents higher than trading a view. No, see, trading a view is not a broker. It's just free stuff. So those, maybe they get their information for free, but the broker, he should pay. That's why he should give you exact information. Okay, so Trump, I don't know this higher or not, but I know that a trading view is not a broker. So you should rely on your broker. You should not rely on other websites. Your broker will give you the right thing. Juan de Casa said, sometimes brokers don't know how to buy and sell stocks, so they give you wrong information. No, it means when they give you the bid and the ask, it is something, it's a software. They can't change it or play with it. Okay? Because there are big traders, they trade, and if they know there is something problem, they will complain, and this broker will have problems. That's why the exchange, they give brokers the same information. Okay? They give the same information, but understand that there are a lot of markets, and so I have no idea how things will work. So for, you say 2 or 3 cents, this means that TradingView, I don't think that they give like a bid and ask. So how do you know? Okay, so understand that you should rely on your broker and check. This is the most important thing that you should understand. So as I told you, it is true. Oh, Juan de Casa said, I mean when you talk to customer service on your broker. Now, see, there are some brokers that have bad execution. You can review this online and you can see if they really have problems with execution. It means they are not paying that much to the exchange. And there are some brokers who are dedicated to day traders, so they give the best price, the best bid, and the best ask for the customers. And there are some that they don't pay that much, so they give I don't say bad information, but it is in execution, it will be so bad. Okay, I have been with a broker. I buy by the ask, and I see there is a big volume, it's very good, the stock, and I will be waiting 1 second, 2, 3, 4, 5, and I don't see that I get filled. So I call them and they say that your bad execution is bad. So, and then I just take my money from them and then put another broker. So understand that sometimes you should, if you don't like your broker, you should change it. There is no other thing you can do. Stop if you continue complaining about your broker and you know that he is not good, this is not good at all. So search other, or go to review, the people who review, and they put a lot of information about the brokers, real information, because they traded with them. And then you see, if you want to change the broker, you change it. Just you stop trading, you take your money, you find another broker, and it's always the good thing to do. And understand that the brokers, some they are for investors. They don't care about the price that much, 5 cents or 2 cents or 1 cent. They don't care, because someone who is rich, he wants to buy 20,000 or 50,000 shares of Facebook or Apple or Twitter, or he doesn't care about this 1 cent or 2 that you are talking about, because he is investing for the long run. So it's not a big deal. The big deal is that when you do day trading, you should always think to have a good broker, and you should go to some reviews on Google, and you should ask people. Trump said, you talked about the industry breakout. Do you observe that all the stocks in that industry is overextended? Oil marketing? No, which industry that you are talking about, which is the breakout? There is no breakout in the industry. What I talked about the last videos is about energy. I see it's going so good from the bottom, and because they have been beaten all this 1 year or 2, they are going so good in the moment. As you can see, the whole market is going good these days. Hello, Mike L. How are you? So so you say oil marketing? See, Trump, when we buy stocks, in general, I don't care if it is marketing or it is drilling or it is services. I don't care. I care if the stock can go up and continue to go up to make money. This is what I care about. So this thing, oil marketing or refining or drilling, you should see them in the industries, and you choose where you want to buy. Even if you want to buy an ETF, not to buy a stock, you can do that also. Or you buy the whole sector. If you see the sector is good and it can continue doing good, you can buy a sector, and that's it. But you don't put no stop loss, nothing. You just leave it for whatever time, 6 months or 1 year, and you see if you have succeeded in making money. Okay, but for me, I buy stocks, I put stop loss. If they go down, I exit them. I don't stay with a loser. Okay, because if you stay once, only one trade, if you stay with a loser, you will be having a lot of trouble in the future. If it's like someone who has a cut in his hand or something, there is blood coming out, you should stop that immediately. Okay. Jeffrey Lang, he has another question. Another question. On your website, it says all discount will be deleted soon. Could you tell us when the discount will be deleted? Now, so you say the discount will be deleted, and when? So what is the thing for you? If you are going to do a subscription, you are getting 13 training, as you might say, and if you do that, you will have to save a lot of money. So I will decide on time soon, but not now. I can't give you a direct answer since I didn't put in my website. But thank you very much for following what I say and what I do. But try to understand that if you are going to buy training or something, it's the time. If you are not, and if the prices go up and there is no discount, it's up to you. So I will not give the discounts again. So it depends on what I say in the website. But thank you very much, Jeffrey, for all your questions. So as I told you before, I'm trying to do as much as help as usual, but understand that for some international students, they have real problems with brokers, with commissions, and with stock screener. Here we are good in the USA that we have a lot of stock screeners, free stock screeners. We have a lot of they are free. It means you don't pay anything. There is no subscription. But in some countries, the brokers, they try to get money, a lot of money from traders. For example, if they don't give you the bid and the ask, you should pay monthly for streaming data. Okay, this is bad for day traders. If you don't trade, they charge you. If you want stock screener, they will ask you to pay a subscription. That is too bad. It means when I'm seeing a lot of guys who are from a lot of countries, I understand there are a lot of problems there. But I hope here in US States of America it's better, and that means that we have a lot of things that are free and you don't have to pay anything. You just you pay just the commission. And but understand that brokers are not the same. So you should compare them before you apply for a broker. You should at least do the thing. So right now I'm trying to just go to the chart and give you a site where is the thing are going in our market. And always when we speak about the whole market, we are speaking about Dow Jones or S&P 500 or Russell 2000, but this is just the big stocks, what they are doing. Okay? Big stocks. We are not speaking about small stocks. Small stocks are different. So I will just explain this for you guys who always question why some stocks go up, the others they don't. So I will give you just some explanation. Okay, just some explanation. Now, if you okay, so here let's say we have Dow Jones. Just an example. In Dow Jones, we have 30 stocks only. These are big stocks, or called blue chips. Now they are doing like this now. Okay, they are going up, down, up, down, up, down, and there is nothing which is right now. The trends are very, very small, and some people, they can't make that much money. Now, if you want to make money, you should go to small stocks because they don't follow the market. Stocks, for example, $25, $10, 5, 2, 1. All these, most of the stocks, sometimes there is a bull in one stock and it's going so good. It's 25 or 10 or 5 or 2 or 30 or whatever stocks. These are small stocks that can be pushed very, very fast. Okay, so these are trends that you find them. Now, but if you go to here in this Dow Jones bigger stocks, you find they follow each other. Most of them, they follow each other. But small stocks, they don't follow. Some stocks are doing good, but some other stocks are going down so badly. Okay, so the market here is very, very volatile in the small market. That's why you should know how to trade small stocks differently from bigger stocks. They are different. So in order to trade, you should know how to trade them. For example, if we go to, let's say, you go to the chart with Dow Jones, okay? Let's say we go to Dow Jones. Okay? So this is the Dow Jones. Now, when these stocks are going down like this, most of the stocks in Dow Jones are going the same. Okay? If the Dow Jones is going up, most of these stocks are going up. If they're going down, most of them are going down. It means they follow each other. Now, why is this? Because the big players, they play one game. Here we have big players. They push it down, they push it up. They push it down, push it up. Push it down, push it up. They push it here down. I don't know if it continues next week or no. Or it goes up. So these guys, they do that much in the market. So they, I don't say they manipulate, but they trade and they do wherever they want, because these things, when it's going down so badly, going up so badly, it is big guys who can change, okay, who can change the direction, not small guys. But if stocks are small, anyone can do that. If it is $20 or $30 or $50, anyone can do that. Let's say if I can find USA indexes. Oh, okay. There is one thing where I can find the stocks. Okay, so let me just check. Yes, let me see the Dow Jones. So before we answer a question of Trump, he said, what's the average volume that has to be to trade that stock? So it depends, because the volume depends on the bid and the ask. It means I can't give you a rule, because when you say, let's say, I give you an example. When you say 1 million volume, is it big or is it small? Is it small when the stock is only 10 cents or 20 cents or half a dollar? It is just small. Why? Because let's say I give you an example. Let's say the stock is $1. If the volume is 1 million, how much money do you have in this stock? $1 million. Do you think that this is big? No, it is very small. Because if you go to Facebook, if you see the volume like 40 million, 60 million, 70 million, and the stock is 165, for example, you will end up having billions of dollars in this stock. It changes hands. These billions of dollars, it changes hands, because there are some who short stocks. Maybe they can make money. There are all other people, they can go long and they can make money. So in the daily activity, there are a lot of people who make money and a lot of people who lose money. It's daily. So this stock is big and the volume is good. So the best thing to do is when you see a stock is go to the bid and the ask. If you find, for example, that the bid and the ask is 1 cent, that means that this stock has a good volume. But if you see 2 cents, 5 cents, 7 cents, understand that this stock has like a little. Okay, so as I told you just few minutes ago, let's go and see what are the stocks of Dow Jones. What are they doing? There are 30 stocks. You can just do and search. So let's go to them and just give you an idea what's going on. Now this is Boeing. Boeing, it's not doing that bad compared to other stocks. You see the others? They do the same. They do the same. This is bad. Home Depot also is going bad, little bit worse than the index. Apple, as someone said, they are going down into what we call gap downs. It means this because of the news, not the earning news, but because of the other news. So McDonald's, you can see that the stocks are not the same. IBM also, it has a gap down, it's going down. It means it has some problem. And you see that other stocks, they haven't gone that much down. It means they resist Chevron Corp. Okay. Here it's energy. JP Morgan Chase and Co. doing the same as the thing. American Express. See, American Express, it has a gap down. Okay. Although other stocks are going down, there is a gap up, and it's good for those who bought it, this stock. Microsoft, Walmart, 86 is doing bad or worse than energy. Exxon, 79. Okay, see, it has been going so bad because of the correction, because of the sell-off that we have seen before. Procter & Gamble is doing bad because there is a gap down, and it's going down for a long time, so this stock might be bad. So whenever you see the stocks, you will understand, you will have some ideas about how the stocks were. You see here that this Merck has a real problem with the gap downs like this. It's very, very interesting, this stock. Intel, it's doing better than the market because you see it's going up. It's better. And the correction has stopped here. So that's why you see that some stocks are doing good into this 30 thing, because it's going up. Verizon doing bad. Cisco Systems doing better. Coca-Cola and Drax is doing the same as the index. And the GE, I told you before that it's doing so bad. You see, it's doing so bad from long time ago. Now it's going up. I don't know if it is clear, something like a new trend, or it is just the news, which is earning news. I don't know. Okay, so this is just guys, this is just an idea. an idea how I look at things. I don't look at the news or the industry news or what they say, or analysts what they say, hold or sell, or so I don't follow all of the other people. What I see is the price. Because the price doesn't lie, I choose always to follow the price. Because the price doesn't lie. I showed you just now, GE has lost, let's say 50% of its money. It's a real thing. It has lost, but the other stocks, they don't lose. Okay, that much from the correction. So it depends on each stock, and you see that the average of all these stocks, 30 stocks, you will have the index. And you guys, if you want to follow the index, you should go and check it's what we call the ETF that tracks the index. You should follow it. There are some people who buy the market. What does it mean, buying the market? It means they don't buy and sell. They do an investing with ETFs and mutual funds. It means they just buy some ETFs, some mutual fund, and they leave them for a long time. That's it. Okay? So please, guys, if you have more questions, please ask. And we will be answering all your questions in this session. And sorry for the beginning, I come just a little late, and hope for those who come late to watch what is missing. And if you have questions, always send me a private message. It is better. Okay? And this is the best thing you can do when there is some issue, or there is something you want to ask about. You just send me an email. Mike L said, do you have a swing trade portfolio subscription? No. You see, I will tell you the reason. Mike, here is the reason. For me, I teach people to be independent from me. Because the market, when you search the market, let's say you find 30 stocks or 40 stocks a day. You find them, they are good. Okay? So each one buys the one that he likes best. Now, if I put a list of stocks, for me, I am very quick to change everything. Okay, to change everything, it means if the stock goes down, it's not doing good, I will exit it and I will replace it. And I have my own portfolio, and it works the whole year. So I ask the people to do the same as me through my training. Okay. So this is what I do. So I do a weekly search. It means I search on Friday, and the main thing about this search is to practice, to show you how to search, what criteria to use. And each time I change the search criteria, although there are two which are main criteria I have, but I have other criteria, and I will put them in the chart and explain to you why I don't buy this stock and I buy the other one. Okay, these are the criteria that I'm trying to do and try to explain. And how many stocks do you hold in your portfolio? Now, for me, it depends. Sometimes 10, sometimes 15. It depends on the stocks that I am in. Okay, but understand this. If you want to do the position sizing, you should look at yourself, at how much money you have and how much risk you want to do. And this you can check it in training level 8. Okay, so it means you should plan to divide your portfolio according to your money. If you have 1,000 or 2,000, you can't do 5 positions or 10 positions. You can't, because the account is very, very small. Okay, so if the account is big, try to see your risk. Okay, some people they put many stocks, some people they put few stocks. And if it is like what we call smaller stocks, it's better to put smaller positions for penny stocks and stocks that are small. You should not buy that much because the risk is too much. You can't compare, for example, a stock that is $2 and a stock that it is $50. There is a big difference. The risk in this stock $50 and the risk in $2 is different. $2 it can go 10-20% a day, either up or down. But in $50 it can go 1% or 2% or 3%. So how the stocks moves is so important you take into considerations. And all the other criteria that I use for my account, it is in training level 8, how to minimize risk and maximize profits. Question: could you go over your trading rules? No, I trade since 2010 and all my rules are the same. Are the same, because if you see the market in terms of price and you have rules, you should just continue with them. Okay? But the thing that I am always, I will tell you, Mike, very honestly, I will tell you that in terms of controlling risk, yes, I will add, sometimes 2 years or 3 years, I add another rule. Why? It's just because you will discover things through your practice. You will discover things. When you discover things, and if it is good, you can apply this rule, you add this rule. If it is bad, you take this rule. So it depends. But changing the whole, changing the strategy, no, because I have many strategies. When the market is going up, I have strategy. When the market is going down, I have another strategy. When the market is into a trading range, I have another strategy. And these strategies works with the stocks in different phases. If the whole market is going up, I should use a training level 2 or training level 3. Okay? If the market is going down, like a correction or something, I use training level 13. If the whole market is doing bad and is going down, I use training level 18, how to short the whole stocks, the whole indexes. It means the whole market. So each phase is different. But in my rules, I didn't go through them a lot. But in terms of control, yes. Brian Loveless, you say, Kareem, what state are you in? I am the moon. No, I am in North Carolina. Trump said, do you trade biotech IPOs? I trade everything. Trump, I told you before, I trade all the stocks, whatever where they are. If they are new or they are old or I don't care. When they meet my criteria, I buy them. AJGMG, how about monitoring the behavior of 23 stocks for long term and then entering to trade so we understand better the up and down? So why you specify 23 stocks? First, why you specify 23 stocks? And we don't the stock that goes down and hit my stop loss, I exit it. I don't just leave the stocks like this. You are thinking about maybe about position trading, or you are thinking about investing. Okay, let's say this year the stocks have been into a correction, and let's say it is a bear market this year. Are you going? Excuse me. Hope the voice is good. So, in the question is, you say, so we understand better the up and down. But stocks, they go up and down each day. And you find stocks that are going up, stocks that are going down, and other stocks that are trending into a range. So, watching the stocks is good, but the rules, I have them. I apply the rules on these stocks, and if stock is not good, I exit this trade. I don't hold for many years a stock, because this it will become investing. When you invest, you should think to know about the company itself you are investing. Okay. So when you say the behavior of 23 stocks, I don't know why you choose this number first. And for me, I trade, I do swing trading for many years. So I have a clear idea how the market is going, and I follow the indexes, I follow the stocks. Each day there are stocks that are going up into trends, and you can make a lot of money from them. You don't need to stay 1 year, 2 years, or 3 years in order to make your money. Okay? What if this year is a bear market? Are you going to buy stocks and see them sinking, and you wait until you lose 20% or 50%? If you do this, you will lose all your money in the market. The market punish the people who doesn't understand how the thing works. If you are an investor, it's another thing. An investor, you are thinking that the company will be doing better in the future. That's why you stay many years. And another question, why, from Trump, why breakouts fail for IPOs? So if the stock doesn't go up and it's going down, it means there is a seller. Okay? If there are a lot of sellers or short sellers, the people will go and short sell this stock for many days or many weeks, and it's going down. So why you want stocks to go up always? This is my question to you, Trump. Okay, so we have another question. A question from Mike L. He said, I believe that you are a real trader. Thank you very much for your trust. Can you explain why you are helping people to trade? Now, the whole my channel I have made, when I just began, I explain things as I see them, because at first I don't find help. Okay, I don't find help. It means I lost money when I began trading. I have made little money, and whenever I go to forums, I go to real meetings, and this is what happened. And Mike, I will share with you. I have a video that is explain my story, how I began, but you can check it later in my videos, and or you can give me your email. I will send you the video how I lost all my money. So here is the thing. I will tell you the story, and hope I hope you understand the thing. First, I have no idea about stock market or about investing. The idea that I have is that when you buy shares of a company, it goes up and you make money. This is what I know before. So I begin to ask questions just like this because I get interested into this business of trading and investing. And then I got one question to answer. That's it. If you understand this question, everything will be answered for you. Why a stock goes up and down? This is my question. Now, I go to forums, I read books, I do a lot of stuff. Wherever explanation they give me, it doesn't answer my question. Okay? And there is some who are using investing and they say, for example, they have criteria about these companies and what it should do. But I have gone to one meetup one time with a lot of people. I wasn't new, and you know, I ask any question. I say to them, okay, I have only one question. Why a stock goes up and why it goes down? That's my question. They begin to explain to me that the company is doing good job and there is, for example, what we call a nice product, and there is no competition, and there is no, okay, all this stuff will not make it when you go to the market. For example, if you go to a sell-off like 2008, what did happen? Everything is going down. So here, it doesn't mean that all the stocks, all the market stocks, all the companies in America are bad. It's not. So there are something that it is behind that we don't understand. Now, the thing that people don't understand is that there are big movers who move the market. Okay, these are most of the time mutual funds guys. So I begin to follow and to understand why the stock is moving up, why it's going down, and I understood that it is of these big buyers and big sellers in the market. Then I begin to follow them and follow the trends, and then I understand whatever should be done to be a successful trader. That's why when I begin my channel, it just begin to explain things that I know, just to share with people. And then a lot of people, they ask me to make something like a training or so that they can follow step by step. So I make my training, I make my subscription, and then the people, they can come, they take the training, they ask questions, they follow me, and that's it. So this is all for what I do. Now, Mike, if you have been punished, I have been punished before also. The only thing that you should understand is that you don't see the whole picture. That is the most important thing that you don't understand. You don't understand that the stock, if you buy a stock and it's going down, if you don't put stop loss, you will be punished, not just little, but you will have big losses. And these big losses, at the end of the year, maybe all your account will be wiped out. With my strategies, it means what I do, what I search, what I explain, you will never lose that much. This if you are just a beginner. But you will see stocks that are making money. It's not because I know the future, no. Just we follow the signal, we buy, stocks go up, we make money, we sell them, then we find another stocks. If the stocks doesn't do good, we exit them with a small loss. Small loss. This is the insurance that you pay to the market. Because we are here in the market attempting to find good stocks. If we fail, you should pay commission. You should pay like an insurance. It's like when you are in good health. But when you are for example, you are sick, you go to the doctor and you use your insurance. In order not to pay too much, you pay just a little bit. This is what we do with stocks. And if someone tells you that he is 100%, he is making money and he is doing this, this is not true in the real market. And the people are just saying what they want to say in order to attract people, and it's not true. So this is the way I saw things. AJGMG, he said, I mean 2 or 3 stocks to monitor for a while and then enter to market. No, see, AJGMG, we search for stocks daily. We find stocks. We don't have to follow the stocks and to put them in watch list. But there is a way in my strategy where you buy from the bottom. So you should have some stocks in your watch list. This is you can do by putting stocks in watch list if they are going down, and then you can find a way when they stop and they begin to go up, and then you buy them at that moment. So you need techniques. Now these techniques I show in let's say training level 13, how to buy from the support line. So this is not easy. This is the most difficult one, is to buy from bottom. But I've explained a lot of explanations how we do that. But there is no 100% certainty, because we buy by probabilities. There is no sure thing. I don't predict. There is signal, I buy. There is no signal, and I don't predict. I don't buy a stock without signal. Okay? Another thing, do you recommend trading as a full-time job? Now, see, for me, I trade like a full-time job, but it doesn't take me half an hour to buy stocks, to search. So the whole day I'm doing nothing. Okay? So try to forget this idea about full-time job. Full-time job, it means if you want to do day trading, yes, you should have a lot of money, and you should maybe I will give you some information. AGGMG, I gave this information last year. So all you guys, I will give you now information about tax. Since if you are in United States of America, I will give you some ideas to understand this thing. Okay, so most of the people, they have what you call individual account. Okay, there is individual account. There is what you call a Roth IRA account. I just try to make it sure you understand. Okay, and there is professional trader. This I will tell you something, because a lot of people, they don't know about this. Now, in Roth IRA, if you have a Roth IRA account, you don't pay tax, which is excellent. Don't pay tax. So whenever you make money or you lose money, you can do nothing. Nothing is being done, because this is a retirement account. So Roth IRA, they don't send information to the IRS. So if you are doing Roth IRA, it means no tax. Okay, which I put it with green, no tax. So it is excellent. So if you want to not to pay tax, you should do Roth IRA in the future. Now, individual. If you make money in the year, let's say you make $10,000 a year. This 10,000 is considered as an income. It means as a job. So it is added to your own income, like from a job. Let's say you have a job here. It is added, and then they will they will have to tax you. Here you pay tax. Now the good thing here in the individual, you can claim $3,000. $3,000 you can claim each year if you lose money. But let's say you lost $10,000 in this year. You will just claim 3,000, and next year you will claim the other 3,000, 3,000, 3,000 each year. So this is what we call the individual account, how it works with IRS. Now, professional trader is very hard to get. You should be a day trader. What does it mean, a day trader? It means you should trade daily, and you should have a good big account, and you should ask the IRS. You can call them, and they can give you paper to fill, and if they accept you as a day trader, they have rules. You should call them, or you should see the papers. Now, what does it mean? If you are professional traders, okay, you can, it's considered as a business, okay, as a business. And even if you lose, let's say you lose $10,000, this 10,000 you can claim it in the tax. And the good thing, if you make, let's say you make 10,000 or 20,000, whatever money you make, you can have expenses. It means as if you don't make 10,000. Expenses is taken from your thing, so you don't pay tax, a lot of tax on this 10,000. If your expenses is $4,000, like fees, like commission, so this 6,000 you pay tax on it, but 4,000 you don't pay tax. That's why this is a good thing. If someone is a professional trader and the IRS gives you this title. But it is very difficult. It's not as easy as you might think. So you should try to see which one is good for you. Is it this one, as most of the people do this one? Is it this one, or is it this one? Okay, so you should see the tax, how it applies, and ask your accountant before you do anything. Okay, so this is just a thing. Now let's say here Trump has another question. Is Warren Buffett dumping Apple now? Now see, I don't think that Warren Buffett, he will trade. He will buy today or next week or next month he will sell. No, Warren Buffett doesn't do that. Now what you see now in the market, if Warren Buffett has sold his shares on Apple, it will be reported next quarter into a file, and you will find it in Apple. Because when you go to Apple, you will find the biggest holders of Apple. You will find them, and you see if Warren Buffett is still owning shares in Apple. But if he sold them, it will not be quick. It will be in 1 month or 2 or 3 or 6 months until he sells all his shares, because he when Warren Buffett buys, he buys a lot, and he is thinking about the future, because Apple gives him dividend. Because Apple is making money, so he will get money from the company, not from the stock market. So this, a lot of people, they don't understand. He is a big shareholder, and he can put a dividend for the shareholders, okay, in the company itself, not in the outside, the outsiders, because he is one of the major holders, and they can give money. They can give money to themselves as executives and the workers who work for Apple. Okay, so you should just follow Apple and search what are the reasons the Apple is going down. Okay, you should just go online and search, because I don't go online and search for why the stock is going down. I don't search. It's going down, I exit, that's it. I don't have to understand all the news of the market. There are 24,000 stocks and mutual funds and ETFs. If you are going to search for this, you will have problem. Trump said, why this hedge fund still in business even if they are performing bad? Now, when you say hedge funds, what are these hedge funds? Okay, and if they do bad business, the investors will take their money and they will exit this hedge fund. But there is a time. For example, if you are trading with a hedge fund, you give him money. If it is for 5 years, you cannot take your money after 5 years. Whatever happens, happens. And you should accept the loss. They will tell you how much loss you should accept. And if they make money, how much money you should get. All this information you will find in hedge fund manager. Okay? And this is for the rich and the wealthy. Most of the time, hedge funds, they don't work for the poor or the common people. Someone with 10,000 and 50,000 or 100,000, this is not money for them to be with them. So they need some people who have millions of dollars to push the trend, to push the hedge fund. So understand that when the hedge fund is not performing good, the managers, a lot of people, they take their money, they withdraw their money, and the manager maybe will be fired later when he doesn't do good thing. Okay, so this, it's not a common thing. Do you look at pre-market when you buy? No. I buy at the end of the day. I have told you many times. When I see the signal, it should be at the end of the day around 3 o'clock. This, where I search, I find stocks. Now, another question. Do you want our accounts to be wiped out if we don't read your training? No. Trump, if you don't want to get my training, it's okay. You just watch YouTube channel, you watch the videos, that's it. It's not, I'm not pushing you to buy anything from me or to follow me. Man, do whatever you want. If you are successful, you are making your money, that's it. You continue like that. So for me, I'm just trying to help. Don't think that I give help and you think that this is not help. Okay? So you can do whatever you want. Trump. Sham Saglain, he said, hi sir, thank you for the video. My question is, selling a stock, does necessarily mean there is someone who is buying that stock? Yes. Yes. If you go to day trading, you find the bid and the ask. I will just explain for those who don't know. Just give you an idea. Okay. Now, if you want to, let's say you want to buy a stock, let's say Facebook. Okay. Now the volume in Facebook is very high. 40, let's say 45 million volume. It means, what does it mean, this 45 million a day? What does it mean? It means that there are some who are buying, others who are selling. So there is what we call matching, and this who do matching is what we call market makers. Okay, market makers. It means, let's say you want to buy 100 shares of Facebook, 100 shares. You will find someone here selling 100 shares. So the transaction will be done here. And it is their job, and it is done by a softwares. It means it is not they see this, it's done by softwares. It's very complicated. But always when there is when there is a buyer, there is a seller. Sometimes you find 0 in the bid and 0 in the ask. You find this sometimes, bid and ask. You find 0. What does it mean here? It means there is no one who wants to sell, no one who wants to buy. It happens sometimes, but not in Facebook. It happens in other small stocks that have 0 volume. Okay? And if someone wants to sell or to buy, the stock will go up, down, up and down very, very fast. Because here it is called a liquid stock, stock with a little volume. So for me, I don't buy this kind of stocks that are very, very liquid, illiquid. I buy only stocks that have millions or that are good when you buy or you sell. Okay? So Sham Saklane, it means there is always a matching, and for you it doesn't matter. When you want to buy a stock, always try to buy stocks that have high volume. It's better. 500, 1 million, 2 million, 5 million. It means, and when you go to the bid and the ask, you find only 1 cent. This is the good stocks. It means when you want to buy or sell, it's very easy. But don't go to those stocks that are illiquid. And when you want to sell, no one is going to buy from you, so you will get stuck in these stocks. Okay? So thank you, Sham Saklane, for your question. Hello, Pasquale Calvosa. Thank you very much for coming. Thank you. Hi, Karim. In this past 3 weeks, with this kind of volatility in the market, have you found a good stock that doesn't hit your stop loss or are doing well? Yes, I have some stocks that I just begin to make some money and then there is a big sell-off. I have found a lot of stocks like this when they are small, and this can happen always. But I have other stocks that are like 1 week, 2 weeks, 3 weeks are doing good, and I keep them until I have enough profits, and then I will sell them in due time. So it depends. Sometimes I have good, sometimes I have bad. But I always get rid of stocks that are that they come to my stop loss. I just exit them. And most of the time, how do you know? How do you know that you are right in stop loss? I will explain to you this because a lot of people, they ask me this question. So I will show you. Okay. Now let's say you bought a stock $20. This is the buy. Let's say you think that the stock will be going up, but the next day it goes down. Let's say here is your stop loss. Stop loss. Let's say you put stop loss 1950. This is just an example, okay? It doesn't mean that I put, this is stop loss. Now if it goes and it hits your stop loss, so you exit. So you lose $50 in 100 shares. In 100 shares. 100 shares. Okay? $50 you lost in 100 shares if you bought 100 shares. And if you bought a lot, it depends on how many you buy. Now, how do you know that you are wrong in your stop loss? Is that if the stock is continuing to go down, your stop loss is good and you are right. And this is the right thing you have done, is you are right. Because the stock, now let's say it is 16. It's going down, it doesn't go up. But what if the stock after a few days goes up again? Now it is $21. You understood that your stop loss was wrong, and you are wrong in your stop loss because the stock has gone up and you can buy it again here. That's why I told my guys, if you bought a stock, I told them to put this stock into a portfolio. In your portfolio, you put all your stocks that you lose here and leave the stop loss as it is. Okay, leave it as it is. Now, if these stocks that you lose with a stop loss, it means you exit, and there is 1, 2, this one, 5, 7, 8, they go up again, buy them again. Buy them again. Because they are doing better than before. So maybe when you bought, you don't buy them on the right time, or not on the right momentum. So this is what I do always. But when stock is going down and you know it's going down, so what you do is just you take it from your portfolio, and that's it. So that's why you should leave the stocks into a, let's say, into a portfolio, and you give it a name. And my chart is a good... Oh, I'm sorry. I'm sorry, I was explaining and I didn't show the explanation. Please bear with me. Okay? So I will repeat again, because I think I have been explaining and I didn't show you the... I'm sorry, I didn't show you the thing. So I just repeat very quick. You buy a stock at $20. This is where you buy. You put stop loss at 1950. Now let's say the stock is going down and it hits your stop loss. How do you know that you are right? If the stock continues to go down, let's say it is now 16, now you are right with your stop loss. You are right because the stock doesn't move up again. But let's say the stock, you bought it at 20, it goes to 1950, and then after a few days it goes up, and now it is 21. So you understand that your stop loss is wrong, and you can buy it again. Don't be afraid to buy a stock again. That's why for me, I put stocks into all the stocks that I lose with a small loss. I put them in the portfolio, not in my trading portfolio. No, you put them in a portfolio which is separate portfolio, and you can give a name. Whenever a stocks that you exit, they come back again, you can buy them again. All the other stocks that go down, you just take them from your portfolio, not to put too much. This is how I trade. And if you do like me, you will have a lot of opportunities to make money even from the stocks that you exit. It doesn't mean that they are bad. It's just maybe your stop loss is bad or your interest is bad. Okay? So this is just explanation. Mike said, that is what I want to do end of the day trading. Do you have training for this? Yes. Mike, the first 10 training is for what you are looking for, but the end of the trading of the day is just when we have a signal. The stock can be going up, it can be going down and then go up. So we have a lot of strategies. But either you can take my subscription, golden subscription. There are 13 training for free, and I will show you how to search. There are things like this. Or if you want to keep the videos, it means in the website, and you watch them each time. So Mike, you should order let's say you order the training. So I will give you the website. You can go to the website and you can check. Okay, and you can contact me. I just put my email. Okay, just in case. Okay, just in case. Let's see here. And you find always my website, my website and my email. You find them always. Okay, here is my my website and my email. You can send me an email if you have questions, or you can go directly to the golden subscription and you subscribe. Or you can buy training by training. If you are not, you can just do the subscription 1 month and see. If it is good for you, you continue. If it's not, you can order this training level by level. So Mike, all when I want to buy, I buy at the end of the day. But there are many strategies. When the market is going up, there is a strategy. When the market is going down, it's going up, there is a strategy. So there are many strategies, but you should, everything is done. You can just go through them and click any training. You will see what it gives, and then you can decide. Or you can do a golden subscription is better, because you just go, you find everything there. You begin to study, you begin to see the lessons, the training levels from 1 to 13. You don't worry about to buy or to, you just continue like this. Now I will have to answer Shikar Sood question. Thank you, Shikar Sood, for coming. I didn't see your name a long time ago. So he asked a question. Sir, how to check that market is trading into a range? Can we still find industries which are going up with the market is trading into a range? Yes. Shikar Sood, I will explain this from the chart. Okay. Let's go to the... Okay. Now, to understand trending into a range, what is it? It means the index or the stock is going up, going down, going up, going down, going up, going... This, it is a zigzag thing. This is called trending into a range. Now, if it is going above this resistance line or this line, you will have the long trend, which is going up. If it goes down this trend, this support line, most of the industries are going down. So you should go either to stocks or you should go to industries. You find them here. Let's say I will give you an example right now. Now let's say you should go, for example, if you are using my chart, if you go, for example, and you go to, let's say here, I will show you. You go to aerospace defense, which is a sector, and it has 2 industries. I will give you an example with this. Now you see that aerospace defense is going up. It's not trending anymore, so it is a good. Industry, but understand that inside this industry there are good stocks, there are bad stocks. But this one, aerospace defense products and services, it's still trading into orange. You see that? So these two industries shows you that that they are not the same, although they are in the same sector, but they are not doing the same. So these stocks here are not doing as good as the other stocks. If you want to go to, you should click on all these stocks and find the exact stock that you want to buy. And if you are following my my training, which is training level 2, you will find the exact day you should buy and the exact day you should not buy. So there are ways to look at this, and this is how I see things. Okay, so Shikar Sud, this is how to know trending into orange or going long or going downtrend. This is how to know about them. Now, Brian Lovelace said, how do you determine how many shares to buy between 2 or 3 stocks within a small account for each individual stock? For example, stock A is 10. Okay, Brian, I will give you an answer about this. Okay, for what we call position sizing, this it is called position sizing. Just to explain the notion. Position sizing. Okay. Now, let's say you have 10K, $10,000. Let's say you want to have 5 positions, 5 stocks. 5 positions. Now, each position, each stock, you should allocate $2,000. So, in order to do it good, what you should do, $2,000, let's say the stock is $10 and we have another stock is $20. Just an example, okay? You try, if $2,000 you have as money, you want to spend on one stock. The stock XYZ and ZYX, 2 stocks. This is 10, this is 20. Now you should divide $2,000 by 10. You will have to buy 200 shares. But if the stock is 20, you divide by this 2,000, you will find that you will buy only 100 shares. It's very simple. You just divide by the price, and then you will get the number of shares. Whatever his stock is, okay? Let's say the stock is $1. $1. You have $2,000. How many shares you buy? 2,000 shares. Okay? So it's very easy. You just divide 2,000 by the number of the price, and XTM, for example, is $1. This is how you do. Now, I give you a rule about position sizing to put 5 or 4 or 6 or 3 or 2 or 1. This depends on your risk. And you can check that in training level 8. How to minimize risk and maximize profits, and you will see that. Okay? Oh, I was explaining too much, and for Brian Lovelace, I was explaining too much, and I will just try to do it again. Okay? So, let's say you have 10,000. This $10,000, let's say you make it 5 positions. Now, when I say 5 positions, it depends on you. You can do 4, you can do 3, you can do 2, you can do 10, whatever you want. But understand, there is a rule here. There is a rule. The more positions, the less risk in the market. Less risk. But if you put only 2, or you put only 1, you put 10,000 in a stock. This has more risk than when you put 5 stocks. Because let's say you put 10,000 in a stock and you have a gap down. You will be losing a lot of money from your account. So let's say, give you an example. You have 5 positions, $2,000, and then you can, if the stock is $10, you try to try to divide 2,000 by 10. You will have 200 shares. If the stock is $20, 2,000 by $20, you will have 100 shares. Now let's say if the stock is $1, you divide 2,000, you will have 2,000 shares. This is how you do it. And if you are interested, you can see training level 8, and it will explain more and more details how is the risk is calculated through these things. Okay, so hope this is explained very well for you. Thank you very much, Mike. Thank you very much for coming. And as I told you, if you have questions, just send questions. Shikar should say, according to you, we need to first see chart of industry indexes and tell us which way the industry is going and which is trading into a range. Yes, this is training level 3. If you are interested to know the details, please go to training level 3, how to search for stocks using industry index. It will explain, it will give you my criteria, because there are criteria that you should see in the stocks, criteria to have a list, and so on. It's not just because it is index you can just go and do it. Okay, so there are things, a lot of things you should see. Also, I know stocks belonging to particular industry, but I am not able to see the industry index graph, which can simply our findings. Now, if you are using my own chart, you will find industries, as I showed you, industries. You will find indexes. You will find stocks that belong to. But if you are trading into, I don't know, if you are India or something, you should find stock screener that have this. Okay. So because I have no idea about are you trading? Yes, you are from India. So do you have a stock screener that shows you the indexes? It shows you the stocks in each index. Do you find that? Oh, yes, you don't have. So I am trying to search for that and I didn't find yet. If I find something interesting, I will publish it on YouTube, and all the people, they can take benefit. Because why your broker has no like industries or sectors graph? It's very interesting that that there is no such thing. So it's I just know that popular in this particular industry is going up or down on a particular day, and of sorry. You can't make decisions on a daily basis. You should see the chart of the whole chart in order to get the signal. For us, we don't do day trading. We don't do the day because the industry is good today, we buy. It's not a strategy. No. So advance and decline ratio, it just gives you the day, but it doesn't give you the week or the month. It doesn't give you no information. So for you should see the chart. Okay, the chart itself. Like when you see the chart. Okay, so you should find a broker who find a free chart. I have seen like a chart India. Have you seen this? Have you seen this a chart India IN? I don't know if you have seen this. It gives late information, but it gives you, I think, industries and stocks and the other stuff, so you can check it. You can check it and see. Oh, it doesn't have. Oh, okay. So this is what I know about India. Try to see. I have one, investing.com, but you should see your country and you should see the stock. Let's see here. Investing.com. Maybe you know it, maybe not. I'm searching also for you guys for India and the other how to find this thing, industries and so, but it seems to me very difficult to find. Okay, so the daily information is not a good way to see the chart. Okay, it is not, and it will be very difficult to get this thing. So you should in India it's big market. I don't know why they don't have a chart for it or whatever. So for now I'm using your other method for find stocks directly using stock screener, but this is for USA. Brian Lovelace said, Kareem, can I use my Roth as a saving account? It means are you not going to buy stocks? Yes, you can have interest rate. You should see your broker. He can put all your money into interest rate. Maybe they give you 1% or whatever. They give you low thing, and your money is given to the day traders and to other margin account traders, and they work with them. So if you don't want to use your so in your Roth IRA you can do whatever you want. You can buy stocks, you sell short, you invest for the long run. It's your problem, because all what you do is not reported to the IRS. So you do whatever you want, and even if you want to take your money, it means your principal money that you put, you can, but you don't take the profits until you are 59 6 months. Okay, and you can ask your accountant for more information, because for me I'm giving you just general information. Hello, USA 2008. Hi there. What is your first language, if you don't mind? So it is 2 languages, Arabic and French. So Arabic and French. So Brian Lovelace said, wa alaikum assalam, how are you? Brian Lovelace said, I want to trade but I need more money. You can, if you want, if you are not going to trade now 6 months or 1 year, you can either leave the money and you add, and you can invest for the long run. You put it into indexes or ETFs or some stocks, and you leave them, or you can keep them and you don't do nothing with them. USA 2008, he say, I am from Kazakhstan but living in the USA. How are you and welcome. So thank you very much for coming, USA 2008. Brian Loveless, and I thought if I use it as a saving, I can transfer money to it. No. Maybe you have a vague idea about a broker. Broker is like a bank. Okay? It is like a bank. You just put your money, that's it. The broker doesn't do nothing. He doesn't say if you do trade or you don't trade. But to check the broker if he accepts to give you interest rate. Okay? So you should call them and you see if you want to leave the money, if they can give you interest rate, if you want to. Or if you want to leave it, if there is no fees, if you don't trade. Because some brokers, they are bad, they ask you to pay a fee. But most of the brokers, they don't. USA 2008, he said, what do you think about S&P 500 in near future? Now, you see, I don't. I know, as we might see, that the market is trending into a range. I have just explained. You didn't come on time to see the explanation. Now, let's say I will show you in the chart. Let's see. I show you the chart. Okay, so as you can see, it's going up, going down. It's like the let's see here. Okay, so this is the S&P 500. This is the ETF. Okay, now if you see, for example, the index of Dow Jones, it's the same. What does it mean? It means that the Dow Jones and the S&P 500, they going up and down, up and down, up and down, but there is nothing yet. There is no trend up or down, so we are waiting. But understand that small stocks, they can go up and go down in everything, so you don't need that. Okay, so they are trending into a range. For me, I don't predict anything. I should see the price and then I decide how I trade. So for me, yes, you want the SPY? Okay, let's give you the SPY. Okay, it's the same as I told you. See, it's the same as Dow Jones. It's going down, going up, going down, going down, going up. So it does the same as the Dow Jones, the same thing. So because most of these three, Dow Jones, S&P 500 and Russell 2000, they do the same thing. All the stocks, most of them, they move up and down in the same rhythm, and even in the same days sometimes. But saying that the S&P 500 is going down, no. Until it crosses this line, it will be a downtrend. If it goes above, it will be a long trend. So we will see this in the future, and this is how I trade. Okay. So thank you very much, USA 2000. But see, we will find stocks daily. Okay, you don't see what we call the index in order to trade. No, we don't see the index in order to trade. But some industries indexes, you can see them, and I have strategy for that, which is training level 13, level 3. How to search for stocks using an industry index. We have a strategy for that. Okay, But for daily search, we search daily and find stocks that are smaller stocks, and we can find each day. So Brian Lovelace said, no activity fees. I am worried about losing my 1 year commissions free trades. So you can trade and you don't trade that much. Since it is free, the thing, you can just, each week you buy one stock. You don't need to trade too much. Okay? And what is this broker that give you 1 year commission for free? What is it? So Brian Lovelace, so what is this broker that gives you 1 year? Is it in just Roth IRA or is it in anything? Oh no! Oh no! It's not Robinhood. No, I don't think. Robinhood. I don't think that they have Roth IRA. Robinhood. I don't know. It's not Robinhood. I don't think it's Robinhood. Hey, Brian Lovelace, can you tell me which broker is this that you are using right now for the free 1 year commission? Ah, yes. You told me before, Fidelity. Yes, Fidelity is a big broker and big bank. 100 free commission. Okay, but see in how many months. Is it 3 months or 6 months or 1 year? If it is 1 year, try each week just to trade once. Buy a stock once. If it goes up, you will be making money. If it's going down, you lose it. Oh, in 1 year is very good. It's very good. 100 by 5, so you gain $500, which is very good. Because you don't spend any money for commissions, which is very good. Okay. Now for Robinhood, it's another story. No commissions, but things will be thing. Djellala, what broker do you use in France? No, I am not in France. I am in USA. I am not French person, and I don't live in France. I live in USA. USA. What is my platform? I use E-Trade because I was before. So E-Trade is my broker. But it has bought my broker before. My broker was Options House. But they bought it. Okay, so it was Options House. This is why my broker before, but E-Trade has bought Options House. That's why I have this thing. Okay, so please, if you have more questions, please ask, because we are in 3 hours 23 minutes, and we will be finishing this this live session soon. So please, if you have more questions, Brian Lovelace, thank you very much. Thank you, and good night for you guys and for all the people. If you have questions, no, we don't buy CFD, because CFD, it is not a real share. CFD, it's not a real share. It's just something that does like a share, but it is not a share. It means you don't own a share when you buy CFD. Okay, you own the value, but you don't own shares. Pratik Desai, hello, I am from India and I want to know how to raise capital by trading. Oh, okay. So, Pratik Desai, you should get a training. You should understand how to trade in order to make the money from the market. It's not easy, so you should work hard. You should study well, and then you can make money from the market. Without this, you can't. For USA, you say there is no liquidity, right? I don't trade them, and I don't know about them. I know that CFD is not a real share. When you are buying just the value they have. And most of the time, they have no link to the exchange. Now, the exchange has the shares. When you buy, these shares will be in your broker, and you own them. You can even have a certificate, and you can take them from the account, from the broker account, and leave this certificate all the life. Okay? And then you can present it to the company and gives you the money back. So I don't trade forex and options and futures and CFD. I don't. Okay. So please, since we are at the end of this session, yes. When you say, please tell, for example, when you buy or sell stocks, you basically in liquidity for the market. But when you buy CFD or sell, you don't add liquidity. Yes, that's why I told you I don't do CFD. These are small brokers. They do something else. You are not in real stock market. You are not. So if you are doing the CFD, you are in another, what we call black market or something like that. It's not real market. So that's why I don't do. So please, if you have, in the future, if you have questions, please ask a question, send me emails, or try to check my website. Okay? So this is my email and my website. So please, if you have time. Oh, you are trading CFD. If you are making money, that's okay. But CFD, they are not real. They are not real trades, real shares. It means you are not. Oh, okay. So because of the rule, of the day trade rule? Oh, okay. Maybe it's because of this. Yes, but CFD is not real stocks. I told you. Real stocks, you should buy stocks, shares. Like Facebook, you find Facebook shares. It's not CFD. Facebook is not CFD. Okay? Oh, you are going to try like real stocks? Yes, you can. Just find a broker and then just buy and sell. So what is your question? So as you might see, yes, what is the... Yes, you didn't ask the question. No, I use E-Trade, but the commission is expensive. It is $6.95 and I... how many times you are allowed? How many times you are allowed to do what? To take a profit wherever you want. You know, when you sell a stock, you have 2 days and the money is settlement, and then you can take your money from your broker. There is no problem with that. It means when you say how many times, whatever you want, it means it is your money. Who can stop you from taking your money? Please try not to compare big real brokers with this smaller brokers that they do their own rules. Here, as you know, in the United States of America, you can take your money, you can put your money again, no one will ask you anything. Oh, I have no idea about that. I have no idea about that. But why you are going to take your profits each month or each week, or why you are doing that much? You can US 2008. What I suggest to you is just go and compare brokers and chat with them and see if they have restriction, because for my broker I have no idea if there is a restriction. I have no idea. So you should ask before you take your money out, because your money is settled. For example, if you sell a stock, you have 2 days, and then the money is settled. Settled, what does it mean? It means you can take your money out without any restriction. So you should ask about that. So I have no idea about Lightspeed broker. I was with Options House. Yes, that sucks. Yes, for you. And it is always free. This change of money from your account to the bank account is always free. So yes. So US 2008, nice to meet you. Please, you have my email and you have my my website. So if you have more questions, please send me your emails and I will respond. This is my website and this is my email. Send me any email any question that you have, and we can discuss it later. So please, other guys who are still watching, okay, do you have any questions? If you have any other questions, please ask before we finish this session. And I hope you enjoyed the session and you get some information. If in the future you have some more questions, don't hesitate to send me an email, istockmoney@yahoo.com, or go to my website and check what I have. Okay? So right now we will be ending this session. Thank you very much and see you next